Good morning, everyone. It is a pleasure to host the session discussing financial inclusion in post-COVID Southeast Asia, accelerating impact beyond access. My name is Jairo. I am investment manager for financial institutions in Incofin, a Belgium-based impact fund manager. Today, we have the pleasure to have Hugh Chiffen, Associate Director in the Center for Impact Investing and Practices, CIIP, and Zhang Guang'an, who is the Vice President of Investment and Analytics in Helicap, one of the most important impact investors in the FinTech ecosystem in the region. We are going to start with an introduction of the report, where Chiffen will navigate it through the what, the why, and the how about the report. I leave the floor to Chiffen. Thank you.
Thank you, Jairo, for that great introduction and also for having me in this session. I will just pull up my screen and I hope that everyone in the audience is able to see my presentation. So as Jairo mentioned, our panel discussion will revolve around a recent report that we published in June on financial inclusion in Southeast Asia. This is a report conducted by the Center of Impact Investing and Practices, or CIIP for short, which is the team that I'm from, in collaboration with Helicap, which is the team that Zhang has come from, as well as UNCDF. Our customer survey impact outcomes data was supported by 60 decibels. Okay, so a little bit about why we did this study. So I think we saw a lot of data and studies out there looking at financial access, and commonly financial inclusion metrics tends to stop or almost stop at an access level. So percentage of people who have access to credit cards, to bank accounts, to loans, etc. But what we really wanted to understand was what happens after that. What is the impact of access? And this was really grounded by a belief that financial inclusion isn't just access, it is around what, for example, UNCDF calls financial health. So things like financial security, financial resilience, control, and freedom that looks at not just whether or not an individual or a business owner has the ability to get access to things like credit or other financial instruments, but how that access actually impacts their lives or livelihoods. So first off the board, I think we see from various studies out there that financial access is improving in this part of the world. We see that according to the World Bank's FinTechs data, that percentage of people with bank accounts have increased to more than 55% in the region, though that still spells a huge gap. Looking at the ASEAN level data, we also see that financial exclusion levels in the region have surpassed their target of 25%, or 30% in 2025. We also see, and I'm sure John can and Jairo can share a little bit more during our panel session, a lot of innovation in the private sector, which leads to increased market share and increased reach to the financially excluded previously. Further, as part of our work with the UNDP SDG Impact, who is one of our partners in Asia at CIIP, we support the UNDP SDG Impact to develop what they call investment opportunity area SDG investor maps. And financial services was identified as a key investment opportunity area across Southeast Asian countries that has the potential to drive both impact and commercial returns. So with all of that in mind, again, when we embarked on doing this study, we understood that first, access is improving. There was a lot of commercial interest alongside government interest and policy interest in this space, but little or not enough was known about the actual impact outcomes in this space. So by doing this study, what we hope to achieve was, in the longer term, to understand how to deepen financial inclusion or financial health in Southeast Asia. This study or this report was really our first step, first phase that provides a high-level overview of the landscape today, together with painting, the traditional financial services providers such as the microfinance institutions, rural banks, etc., alongside the emerging digital financial services providers, including FinTechs and embedded financing players. Looking at this holistically to highlight best practices amongst financial services providers who are innovating both traditional and the FinTechs to address the underserved. And lastly, of course, to share the customer voice on what it's like to be included or have access from a position of vulnerability. Okay, a little bit about our approach or how we went about doing this. We engaged with a total of 60 organizations across about a year. We collected data at multiple levels depending on the stakeholder type. So first, we conducted about 50 management interviews, and these were in-depth qualitative interviews with business leaders, with financial services providers, investors in this space, including the likes of Incofin and Helicap, as well as industry associations, to really understand from the industry perspective, first, what was each of these players' mission and strategy? What best practices have they seen within their own organization, as well as in the broader market? What the role of digitalization is, especially in a region like Southeast Asia, where digitalization has increased rapidly and even more so fueled by COVID-19. And lastly, also to understand what the market opportunities were and what the remaining ecosystem needs are. Second, we collected enterprise-level data through two means. First, an enterprise survey that sought to understand the broad customer segments, the processes of the financial services providers, including the level to which they integrated impact into their operating model and governance, their digitalization level or sophistication, as well as anonymized loan book data. And this really gave us an idea of their reach and impact from a financial and business perspective. Lastly, we complemented these data with what we think is very important, which is the customer voice. So working together with 60 Decibels, we ran customer surveys with over 6,500 customers of about 28 FSPs or financial services providers across the region, to understand from the customer perspective, from the end beneficiary perspective, what the role of digitalization was in improving access, what the impact of access to credit was on their livelihoods, on their quality of life, as well as their household outcomes, whether or not there were improvements in their financial health. So in their security, their ability to independently make financial choices, financial understanding and literacy, as well as financial management. Importantly, we also wanted to address what is commonly known and commonly raised issues of potential negative externalities or negative impacts of access to credit, such as the burden of repayment, over-indebtedness, as well as treatment by financial services provider agents. So just a quick snapshot of our sample. We engaged with over 6,500 customers across 5 Southeast Asian markets. Our main countries in terms of sample size were Indonesia, Cambodia, and the Philippines. And the FSPs or the enterprise level data follow a similar pattern as well. Okay, so on to the good stuff. A few key insights. It's a 100-page report, so these are just a few of the high-level points that I thought would be interesting to raise in this session, but we can dive a lot more into this in our panel discussion and beyond if there's any interest. So first, we saw that there was data to show that digitalization is expanding access to credit. And this was a nice proof point for us because I think a lot of conversations qualitatively before had hinted at the fact that potentially FinTechs were addressing an already addressed market. And so with this study, we were able to show that actually FinTechs were addressing first-time customers, as well as those who were not able to find alternatives. And I'll give you a little bit more flavor of what this means in a second. Second, there was overall very positive impact of access to credit on the customer's outcomes. Majority report improvements in business growth and livelihoods, improvements in various financial health dimensions, and increase in ability to spend on household items, especially in this part of the world on children's education. Third, and what we found very interesting coming from the Center for Impact Investing, was that intentionality and action on the financial services providers' part mattered. So financial services providers who had processes in place, practices in place that looked at impact, that integrated impact, or looked at client protection, actually had customers report better outcomes than those who don't. So for us, I think this was a very interesting proof point that shows that impact intentionality and the integration of impact into business processes is critical. There are some interesting differences in the Southeast Asia's performance versus the rest of the world. Areas where we do better and areas where we are underperforming. So I will go a little bit into that with more sort of cultural differences and biases and responses in mind as well. Lastly, we do see opportunity for further impact. Things like ensuring digital equity. We're still seeing FinTechs or digitalization reach more urban customers, higher income customers, rather than rural end beneficiaries. Providing holistic services beyond credit, we see a lot of demand, and it is much valued by the customers to have access to services beyond just basic loans, as well as opportunities to develop segment-specific capacity building approaches, training that is tailored to the needs, be it by gender, by income levels, by location, geography, etc. Okay, so a little deep dive into each of the points that I mentioned earlier. First, that digitalization is playing a key role to expand access. So we see that 74% of customers that we have surveyed actually say that financial services have been expanded in terms of access because of technology. We see also that fintech customers, which makes sense, report a higher increase of improvement because of technology. So the colors you want to pay attention to on this page are the dark green and the light green or turquoise. Those are positive indications, i.e. financial services, access to financial services have improved because of technology. We see that there is a similar divide in terms of urban customers as well as rural. So urban customers, similarly to fintech customers, also report greater improvements in access to financial services because of technology. Now, importantly, just because they have access doesn't mean that's a good thing. So we have also asked whether or not they feel safe using technology to access financial services. And fortunately, promisingly, 82% actually do feel safe. Now you'll see that there is some divide in terms of fintech customers feeling safer, as well as younger customers feeling safer. So here, I think there's a lot of scope for cross-sharing between fintechs and traditional players on how to integrate technology in a safe way for their customers. Next, I did mention earlier about fintechs reach versus traditional FSPs reach. And you'll see that overall, about half of our customers surveyed were actually first-time customers, and also nearly half say they can't find alternatives in the market. This is key because this means that we are reaching, or the FSPs in our sample are able to reach those who are either unserved previously or underserved. Again, you'll see a slight difference between the fintechs and the traditional players in that more fintech customers are saying that they are first-time borrowers and that they can't find a good alternative in the market. Interestingly, urban clients are more likely to be first-time customers, and maybe intuitively younger customers tend to be first-time borrowers as well. And that might be a correlation there in terms of fintech customers reaching the younger crowds who tend to be first-time borrowers. Okay, so let's get into the impact side of things. So we do see, as mentioned, all across the board, I'll take you through a few of the metrics that we looked at as examples, but there is majority report positive impact of access to credit on their business income. So here you'll see, again, if you pay attention to the light blue colors on screen, majority of the customers report an increase in income, in their business income. Here, the delineation is between females and males. So you'll see, and this is a strong correlation trend across several metrics, that females or women tend to report more positive impact from access to credit than men. Nearly 90% actually reported an improvement in quality of life. And even more promisingly, this has a knock-on effect on other types of impact outcomes, including increasing household spending on education and quality meals or food. While we see also that women are more likely to report an improvement in quality of life, they are also more likely than men to increase household spend. Unique to this part of the world is a focus on education spending versus, so you'll see that 62% of our customers increased education spending versus less than 50% globally. So we see, a lot of focus on education in this part of the world, which, I think surprises no one if you're from Southeast Asia. Beyond business and quality of life outcomes, we also looked at various financial health outcomes. And promisingly, again, over 85% of customers actually improved their agency, i.e. they were better able to achieve a financial goal because of the financial services provider. Again, if impact was more pronounced in women versus men, and similar trends with the ability to face emergencies as well. One point to highlight here, though, is that while women were more able to improve their ability to face emergencies, and what's not shown on screen here is that women were less able to address a financial emergency to begin with. So there still is a disparity in terms of needs and highlights the need for us to take a gender lens when we look at financial inclusion interventions. Thirdly, as mentioned, we see that intentionality and action on the financial services provider part is reflected in their customer experience. So we see that customer impact outcomes are better for customers of financial services providers with formal impact management and measurement systems. And this means integrating, impact processes. This means integrating impact or client protection services training with their employees, aligning incentives, providing training, etc. So if you pay attention to the dark blue bars on this page and look across the categories of have a formal system versus no formal system, you'll see that across the board, those who have a formal system have customers that report more improved quality of life, increased savings impact, as well as impact on the business. Now, this is all very good, and I think there is a lot of promise for financial inclusion and financial services providers in Southeast Asia. But how do we perform across versus the rest of the world? So where we stand out is around client satisfaction. As well as in terms of client protection and access, Southeast Asia as a region tends to be quite on par or just slightly lower than the global standards and outperforming regional, broader Asia and South Asia. So I think this means that our financial services providers are able to reach the underserved or are reaching the underserved. And they're doing so in a responsible way and in a way that actually delights customers. However, where we see there can be more improvements or more focus is the what's next. Now that we're able to provide access, how do we encourage our clients or customers to use that access to increase their impact on their business, on their livelihoods, to use this to improve their household outcomes, as well as their own financial health outcomes. Now, there are many different macro factors that come into play that makes cultural difference comparisons quite difficult. Things like, macroeconomic factors, cultural biases and responses. So I think we're in the beginning of a journey to understand what are the driving forces and factors behind these results and differences. I would highlight that although it's not shown here, there's a huge variety in terms of performance across the financial services providers that took part in our study, as well as across different countries within Southeast Asia. So I'll leave it at that. Happy to discuss further if there's any interest. Okay, last couple of slides before I end, and we can get on to the fun part, which is the panel discussion. But really to highlight that there are many opportunities that remain for driving further impact, and these are just a few. So while we see that FinTechs and digitalization is expanding access, we see a very clear digital divide line. Urban customers are being reached more, men are being reached more, and those that live in rural areas, women, lower income customers, they still need to be accessed, they still need to be served. Not only FinTechs can digitalize and innovate, we see a lot of innovation starting to happen within the traditional financial services provider space. And we think there's a large opportunity for that to continue to improve the customer experience and innovate products to increase access. Second, and this is a point that we'd like to stress, is that financial services and financial inclusion isn't just access to credit. And we see a lot of promise of those who offer non-credit services alongside credit on the customer front. So those who do provide non-credit services have customers that report greater quality of life impact and greater business impact. In terms of what exactly, we see a gender difference. So females or women clients tend to favor business-related services as well as savings, while male clients tend to prefer or value payments and insurance services. In short, I think we think there's a huge opportunity, both from a business perspective and an impact perspective, to bundle non-credit services with credit services to drive impact. And lastly, just to encourage everyone to take a segment-specific approach to training, to customer engagement, because we see so much differences between female customers and male customers, rural customers and urban customers. And here are just a few ways that we can develop more targeted initiatives to address these different customer segments. Lastly, just put this on screen maybe for half a minute to share that our report is online. You can scan the QR code here to download the main report that was published in June. We have also since released an addendum that provides a little bit more information. We were able to collect a little bit more information on more customers across Southeast Asia. And because we could not pack all the insights, all the great insights that was done by 60 Decibels into the main report, there are also additional analyses in the addendum that you might not find in the June report. So I'll pause here, hand over to Jairo to take back the time and guide us through the panel discussion.
Thank you so much, Stephen. And thank you for the comprehensive presentation. It is great that you summarize a document of 100+ pages in a few slides. I'm pretty sure that people is going to be very happy with that. So we strongly believe that in Incofin, that this type of initiative are quite interesting to understand the current scenario of financial inclusion in Southeast Asia. But also it's quite interesting because it's a great tool to find new opportunities and to understand the challenges looking forward. in our region. I could say that, and I want to start with maybe one of the most important topics within the report, and is the difference between access and impact in financial inclusion. I want to start with you, Chifen, about which has been your experience with all this conversation with the different fintech and traditional financial institutions about the definition of impact. Did you see any discrepancies on the definition of impact? And if so, how do you assess that difference? What do you think about this?
Yeah, no, thank you for the question, Jairo. I think in our conversations with FSPs across the region, there is definitely a range, a fairly wide range in maturity in terms of how these FSPs view impact on their customers. We have those that think of impact as access, which I think is commonly thought of. But we are also seeing a good proportion starting to really think about impact outcomes, and providing things like training to their customers to ensure that they're not over indebted. Those who provide financial literacy training to their customers to ensure they really understand what they're getting themselves into, et cetera, et cetera. So we do see a broad range. While we were writing the report and with our partner, the UNCDF, they have a great framework that defines financial health outcomes across 4 broad dimensions of financial security. So ability to meet a short-term emergency, for example, financial resilience, financial control, your independence, your financial independence, ability to make decisions for yourself, and financial freedom. So your ability to plan for the long term in terms of your financial decisions. So I think we just need to be mindful that there are different definitions around, but that it is important to have a holistic view of financial inclusion impact outcomes rather than just stopping at access.
Thank you so much. Yeah, I agree with you. That is, I would say, the most important part is just how you can balance and talk in the same language. I mean, investors and investees about impact and around what is needed to moving forward through, I would say, to that financial inclusion 2.0 and the next phase of impact in the region. Sank, from your side as an investor in the region, can you explain us a little bit about how important is impact in Helicap's investment thesis?
No, I think that's really core, right, to our thesis, because that's really what we're trying to address with really the massive credit gap that we see in the region, right? In MSMEs alone, there's already a $300 billion credit gap, where SMEs, micro enterprises, they're either they don't have access, or maybe they only have access to a partial amount of the credit, the amount of credit they actually need to in order to grow their business. So that's within MSME alone, and then beyond that, there's still 70% of the adult population in Southeast Asia which are still underbanked, and that's a massive number, right? So I think driving this financial inclusion, closing the credit gap is core to our mission. And I think when you think about impact, access is one part, but it's really something that's multifaceted. Access itself, the quality of the access has many dimensions to it, right? It's not just someone being able to access credit, it's them being able to access credit to the extent that they actually need. And it's also, I think, other measures of that credit. For example, what is the price they can access that credit at? Is it affordable to them? Is it actually priced at something where could catch them within a debt cycle? And then they're just going from month to month, right? Trying to meet those repayments. Is the tenor of repayments for their loan actually sufficient? Because they might take multiple months in order to generate the income that's needed in order to make repayments over time. So can FSPs, financial service providers, actually provide the terms adequately in order for there to be sufficient impact and that access to translate into actual impact, meaningful impact to customers? I think that's something that, I think it is very important for all investors in the region to actually look at when they consider investments and supporting different FSPs. And yeah, maybe one thing that FSPs themselves can improve on is actually tracking that impact, because I think that's one thing, right, where we see some FSPs in process of doing this report where they're maybe a bit more advanced. They've already gone to the stage where they're tracking improvements of quality of life over time. But not everyone is doing that, right? Not everyone is tracking, for their customers, are their monthly incomes increasing over time? Are their business incomes increasing over time? Is their provision of credit actually having a real impact on their customers? I think that's something that maybe the minority of FSPs are doing, and yeah, I think that's something that we also try to encourage with all the different partners that we work with.
Absolutely, yeah. I could say that part of tracking the impact it's important, and is going to be more important in the next couple of years. And the question on that is, what do you see in the market that institutions, traditional and fintech, are doing in that way? What they are intended to do? Their investment in technology to try to track in more and more information from their customers. They are collaborating with the government, for example, with the different initiatives to track in what is the impact of the provision of financial services. What are you seeing that in that matter? Sank, please.
Yeah, no, I think it takes multiple layers of work, right? I think tracking of the impact, I think firstly, you need the technological system to support that. You also need the resources to support that, right? But in order for you to devote the kind of resources to develop these capabilities, that also takes, I think, time, effort, and money, right? So I think one thing is that what maybe has to be clear to the financial service provider themselves is that actually doing this, engaging with your customers on a deeper level and tracking their the improvements within their lives and how you can actually generate that improvement really helps to build customer engagement. And I think in the report, that deeper level of customer engagement also translates into higher net promoter scores, higher satisfaction with your customers, right? So I think what's important firstly, right, is really for these financial services providers themselves to realize that this actually has a business case, right? You track all these impact metrics, not just for the sake of tracking them, but because firstly, your customers actually have tangible outcomes that then translates for you into better customer satisfaction. It also translates into better portfolio quality because your customers are better able with improved quality of life to increase their repayment capacity. So there's a business case to be made, right? For spending more resource to better engage with your customers and then also track your customer metrics of their lives over time. And once you have established that, once you have that sense that, I actually want to do this, then you can find the ways in which you can actually do that by developing the technological capabilities to do so, right? It could be just having a very good loan management system and then having the appropriate fields that you capture so that you can train your employees or your staff when they go out to reach your customers to collect the correct data points, right? So I think it takes a top-down approach. It takes firstly the awareness for these organizations to make a concerted effort to do so. And then I think once they have gained that awareness, that's where it makes more sense for, I think, other players or other partners or even the public sector to come in to support their mission further. Because then I think when the public sector comes in to make a decision, they also look at what the outcomes or the tangible results would be, right? They need a bit of visibility over that. So if you have demonstrated that, you have formed these capabilities and you have that willingness to really engage with your customer base, I think that's when it's easier firstly to get in that kind of public sector support. And I think all the resources that you can get from the public sector can also be directed in a more effective manner as well.
Thank you. No, that's quite important. What we are seeing is that impact have two phases, and the first one is intentionality, and that you see that the institutions are really care about this. But second, of course, a system to track all the information from the end customer to see if you are creating a positive impact on that.
Yeah, maybe I would just
sure.
like to add to Zhang's, because I think he made a really, really good point that as part of the report, one of the very clear links that we did see is that customer impact or improved customer impact actually was very much linked to customer satisfaction and customer retention. So there is a strong business case. I think, those who reported very much improved quality of life was 30 percentage points higher than those who reported just a somewhat improved quality of life. So the difference is stark, and I think that the business case is strong. What I think a lot of FSPs would appreciate, or what a kicker would be, and I'm speaking to two investors here, but to have investor demand or pressures from their investors also greatly encourages FSPs to do things like a customer survey or set up impact measurement systems. So I think that's the feedback that we've heard as well, that maybe something like a technical assistance grant from their investors would be very useful, because conducting a customer survey the way that we have done is actually a fairly costly exercise. As Zhang mentions, I think the more the FSPs are able to automate the data collection within their usual business cycle, within their usual customer surveys, etc., I think the more cost effective. But yeah, I think just to raise.
Thank you. No,
Yeah.
that's quite interesting, and it's a good opportunity for investors because it's very clear that there is a need of funding, and through the different programs, not only through loans but also for technical assistance programs. I could say that it is going to be a good opportunity for the next couple of years in the region. Please, Sang, do you want to add something?
Yeah, no, I just wanted to add that, yeah, I fully agree, right? There's from investors that there can be funding support, but there can also be non-funding support. And that's really how we want to work with all the financial services providers that we partner with, not just being a capital provider, but also helping them along in their journey to actually better collect data more effectively, and also analyze the data that they've collected from their customer base to better understand the needs of their customers and also the progress that they've made. So yeah, for us in our investment process, actually one very important part of that process is this data collection and reporting, right? That's also what we've developed internally, a credit analytics platform where it's all the different metrics surrounding their loan portfolios that we can collect on loan performance, but also the impact that they've made. So things like first-time access to financial service, that's one, right? But also growth of businesses, whether your monthly income has increased over time, what's the gender composition within your portfolios, and geographical distribution. I think all that information is something that we almost mandate that our portfolio companies would need to collect and provide. So that kind of, I think, discipline about collecting data, yeah, especially for maybe some financial services providers who may not necessarily have developed a full kind of database where they collect that data. We are also kind of empowering them with the tools that they need in order to better track and measure both financial and impact performance.
Thank you. Yeah, agree. Completely agree. Quite interesting. Moving forward to the what the report indicates about the potential of the sector. I can name a few of them is the size of the market, the fact that inclusive financial inclusion is a priority for the governments in the region. Innovation for private sectors is quite strong, and there is a potential to achieve positive impact in the next couple of years. Chief, in terms of the innovation from the private sector, what do you think other regions can learn from Southeast Asia? Innovation in the private sector, I would say it's one of the strengths of the financial inclusion market, and I would say there are many things that other regions can take from this. What do you think about this?
Yeah, so I do think the increasing digitalization in Southeast Asia as a market or a region, especially through COVID, I think the last stat that came out was something like 80% of the region are online. So I think this definitely drives down costs to reach the underserved, and the ability for financial services providers to innovate and reach the end customer, especially through mobile phones. So everyone is online on their smartphones rather than laptops typically. And we are seeing a lot of innovation, both in your DFS, your digital financial services providers, and also I think even nearly half or more than half, about 60% of the traditional players that were in our sample were not just offline, they were hybrid. So I think technology, digitalization, the internet, these are all very powerful enablers for the FSPs in this region to drive innovation and to increase access. I would say that we have heard the other side of the coin as well. It's not really a huge panacea and everything is solved and we'll have inclusion 100% in the next year or two. There still remains a very stubborn gap. As mentioned, there is still a digital divide. Countries like Indonesia, like the Philippines are made of thousands of islands, and much of this population still remains hard to reach. And even though there is penetration from a digital perspective and everyone is on the phone, literacy is key. So one of the key issues that came up during the report is not just the need for better financial literacy, but it's also the need for better digital literacy. Because just because everyone is on a phone and able to access Facebook, Instagram, etc., one doesn't mean they're using it for productive purposes or using it to do things like access financial services. And two, it also makes them more susceptible to fraud, to online crime, etc., etc. So I think, digitalization is really, really great. And I think there is a lot of potential for financial services providers to ride on this, to provide better access. But at the same time, to emphasize that there is a need for increased literacy programs, and increased sort of targeted initiatives that address those that don't already fall within the urban, middle to middle income segments. The second part of innovation, I think, really is not just technology innovation, but innovation in terms of business models. And I think here, players within, say, the embedded financing space has really increased in recent years to provide examples of very promising models that are closed loop, that are able to reduce the risk of lending, of access to credit through pretty innovative or interesting processes. So business models like earned wage access, whereby employees are able to access their earned wages just outside of the usual pay cycle. This allows employees to get access to credit when they really need it the most, but also reduces the risk of the capital or credit provider because you are lending to an employee base that is within your own company or within that own company. Another quite interesting model we have seen is B2B or business to business buy now, pay later schemes. So I think most of us are aware or are exposed to the e-commerce version of this, where you go onto Lazada or Shopee and you buy something and they say you can pay in 3 installments. So you're like, great, 0 interest free. So some players have taken this and translated this into a B2B model, whereby they're able to provide inventory on credit to all these small mom and pop stores. You're thinking, warungs in Indonesia, sari stores in the Philippines. And first, they aggregate demand. So they're able to provide this supplies to these stores for a cheaper price or a better price, more competitive. They are able to access business data from these stores. And so they are better able to underwrite the risk of their customers. And so in this sort of closed loop system, they're able to serve those customers who would never have been able to go to a bank and get a loan out to increase their inventory, increase their sales or turnover. But through a service like these players are able to provide, are able to access more inventory for better prices, and also in a very closed loop way, able to ensure that this access to credit goes straight to productive use and productive purposes, and directly impacting their turnover, their sales, their revenue, and their bottom line and their business performance. So yeah, I think those are a couple of examples. When people think innovation, they're thinking always digital, which is great. Still some issues there, but I think business model innovation is also a key part.
Thank you so much. Yeah, of course, in terms of business model, we are seeing a couple of initiatives that are quite different from other regions in the world and that are taking traction very fast. And as you mentioned, B2B, B2B2C, or the strong e-commerce ecosystem that are financial institutions are taking advantage of all of this. For the case, maybe from an investor's perspective, Sang, all these new business model, buy now, pay later, for example, they're using in some cases alternative data. How do you assess that situation? How you're managing that opportunities, but also that risk in the portfolio?
I think for financial service providers, the more data they can get, the merrier, right? So I think these kind of new innovations within be it technology or business models that enable them to get more data, it is definitely a positive, because then they have more data points to underwrite their customers better as well. If you think about, for example, the case of, I think, embedded financing, which is also one of the newer innovations, right, in the current market. There are increasingly number of players who are basically offering an existing product or service, or they have an existing ecosystem, but they are using that to really to leverage that to get more data on their customers. So this could be, for example, if you're operating an e-commerce platform, then you get transaction data, you get behavioral data, you know exactly what your the merchants are doing, how much are they selling, what kind of products they're selling, what's the monthly average cash flows that they have. And you can use all of that data to basically make better credit decisions. And it's really a win-win, because with this, leveraging this data, you can get around some of the, I think, main obstacles to credit, right, that the underbanked populations face. For example, if you have no credit history, you have no collateral. I think those are really the main, I think, reasons that prevent you from being served or getting a credit line from banks. So with these alternative data and then making these alternative business models or lending models possible, yeah, it's definitely a boon for the whole ecosystem, because you can address a larger market, but at the same time, you can address it in a way which is sustainable with good portfolio quality, because you actually have a much better and deeper understanding of who you're serving.
Thank you, and that is, I could say, a great opportunity to start also with new projects, technical assistance to support those institutions that have the information, the traditional and the alternative information, but they don't know how to manage it and how to assess the credit risk of the end borrower. So I would say that we are in a moment that there is a lot of need in terms of supporting these institutions, how to manage all this alternative data, and for those that really understand how to use that alternative data, how to be responsible with that use of alternative data. And I could say that is the next topic that is important in the report, and it's clients protection. And the case of you, Chief, and how do you assess the client protection? You mentioned that in your presentation, but what do you think is needed to enhance the credit protection and the responsibility from the institutions in the provision of financial services?
Yeah, I would actually say that most of the financial services providers we spoke to had client protection at top of mind. I think it is a key issue that has received a lot of attention, rightly so, in recent years. So I think awareness is there. The fact that they need to make sure that their clients are not over indebted, that they're not over levered, et cetera, et cetera. Where we do see a difference is, awareness is one thing, but the systems in place, again, accountability, a system to ensure that over indebtedness actually doesn't occur. That's where we see a broader spread of whether or not these financial services providers actually say, train their agents to ensure that on the potential of over indebtedness, whether or not they have systems in place like loan caps, et cetera, that will ensure that the clients don't take out more than X number of loans with them over X value. That sort of thing. I think there's a spread in terms of how many of these practices or processes are adopted by the FSPs. What we are able to show, though, in the study is similar to the impact outcomes side of things, that FSPs who actually implement practices and processes to prevent client over indebtedness have better client outcomes as well. So clients are better able to address their financial emergencies. Those FSPs with policies on training their agents to avoid aggressive tactics also have customers that say that they're better treated by their FSPs. So I guess what I'm trying to say is that I think the awareness of the importance of client protection is there with the FSPs, but there is still scope for some FSPs to improve their processes, to improve their policies and their systems in place to ensure that this actually translates to good client outcomes or their clients being protected. And that their actions do matter and will result in a client experience that is valid.
Thank you. On top of that intentionality and best practices in the market, there is also the regulation in each of the countries. For you, Sang, how do you assess that different regulations among the countries in the region? We are seeing some institutions that are from Indonesia, for example, and they're expanding to Philippines, Vietnam, Cambodia, but the regulation is quite different. How do you assess that and how the entities are balancing the different regulation and how they are trying to comply with all at the same time, but keep the client protection in the center of the investment thesis?
Yeah, I think in Southeast Asia, there's no choice but really to study and understand each market individually, right? Because I think many investors, global investors, they think of Southeast Asia as one region, but actually there's so many different flavors within the region. I think we've seen many cases of companies who have maybe established themselves in one market and then try to move to another market, but just face so many difficulties there, right? And I think those challenges take shape in multiple forms, right? One which is regulatory, and for that I think be it investor or be it the FSP themselves, you just need to do the whole work around legal due diligence, talking to people who know the ground, who understand the operating environment. So if you can actually get maybe partners who already understand the market and use it to then try to establish yourself in a new market, that could be one strategy to use. Yeah, I think for us, I mean, we always try to walk the ground, right? We visit different countries, we talk to all the possible players within the ecosystem in order to really understand the market. So that's customers, that's could be investors who are already in the market, it could be the regulators, it could be lawyers, right? So I think you need to get each part of it correct. You need to obviously be operating within the frame of that jurisdiction, right? You need the correct licenses. And then after that, it's just about how you really understand the customer needs, and then you see how you can actually penetrate the market, right? By serving and targeting those exact needs of the customers within that country.
Thank you. Yeah, no, thank you for your answer, because that is the reality of the region. You have to understand deeply each of the regulation, each of the countries, and which is evolving very fast. So it is challenging, but also it's an opportunity to handle and client protection. It's one of the situations that it's crucial within each of the countries. We have 4 minutes more. If there is any question from the public, please let us know. We can take a few questions from the public. But if not, I wanted to wrapping up the session with 1 minute. What do you think is the main message that you wanted to send it to the public related to this interesting report, looking forward for the next stages of the report or other research that are in the future? You want to start, Chifen?
Sure. 1 minute. Okay. So I think, the key takeaway is that there's a lot of potential, right? There's a lot of opportunity in this region to drive financial inclusion. And not just that, but to do it in a, commercially viable way where private sector has a real opportunity to lead. Of course, there are enablers that are critical, right? So we do need, public sector, we need, more regulations, clarity of regulations so that business models can flourish and grow. We need regulations that encourage and embed client protection at the heart of financial inclusion. But we do see a huge potential for the private sector to lead in driving financial inclusion in this part of the world. And, this study for us was the first step towards understanding this sector in this part of the world better. I think next steps, we would be driving things like capacity building initiatives. We are already planning the next phase of our study or next part of our study to expand our coverage to more countries in ASEAN. So, we recognize we're only able to cover 3 to 5 countries so far. So I think, next steps definitely will be looking at expanding the coverage of our study to understand the region on a broader level. But really also to drive tangible and actionable initiatives. So we're on the lookout for partners to drive capacity building initiatives, We're happy to run workshops with financial services providers on how best to engage your customers, how best to drive customer impact, and also, of course, participating in sessions like these to share what we've learned. Thank you, Jaro, for having us.
Thank you so much. Sang, do you want to add something?
Yeah, no, just maybe very quickly, I think maybe one of the main takeaways is that I think it's very heartening to see all these new innovations, right, taking place to tackle this massive challenge that we have, and also the credit gap that we have. So in the last 5 years, you have so many new business models that come up, like EWA, like BNPL. But I think in the next 5 years, we can look forward to a lot more, because there's still many different segments that are still underserved, right? If you think about education finance, agriculture finance, housing finance, there are still so many customers within these segments that still need to be served, right? And I think it's good that there are really the green shoots of companies who are serving these segments. I think in 5 years we'll be seeing I think maybe players within these segments become more mainstream and of a larger scale as well. I think that's something we can look forward to. And I think secondly, I hope that this report also conveys the importance of all the collaborations and partnerships between the different players in order to address the credit gap. It could be between different FSPs, right, to target harder to reach areas like rural areas. It could be between different investors, right, co-investing to better understand different segments, different markets where each of us have our own expertise in. And it could be private and public partnerships as well. And then I think the last point is just with I think the whole progress of the ecosystem, us also having a better sense of what data is important to track and to improve practices. That really, I think, leads us to the next stage, and hopefully we can do maybe a next iteration of the report to maybe focus and expand on some of the interesting points, like for example loan caps having a correlation with portfolio quality, right? I think our sample size for that particular finding was small, and we would love to expand it, cover more markets, more different segments. So yeah, I think that's something that we are looking forward to work with both with CIIP and hopefully Incofin too.
Absolutely. Thank you so much, both. Thank you so much also for Financial Inclusion Week to having us. See you next time. Thank you so much. Have a good day.